Hi everyone, and welcome to my morning report on Thursday the 15th of October with me, Richard Perry, market analyst at Handset Markets. I'm back from a little bit of a break away, and the markets have certainly moved on since I've been away for the last week. Big moves actually coming yesterday, big dollar moves. The retail sales data that came out yesterday significantly affected the dollar, and it seems as though that the data's coming out and deteriorating, and it's sort of putting back the expectations of a potential rate hike, and the dollar has come under rather large pressure on the back of that. Let me just show you the dollar index falling sharply in the last few days. Also looking out for the Treasury yields, the 10-year. Here we go on the 10-year Treasury yield falling sharply again yesterday. So it just shows how expectations of US growth and US rate hike have been sort of substantially taken back. That has impacted across the forex majors. The euro is sharply higher in the last few days. Also cable, big jump on cable yesterday. I'll take you through the charts in a bit. And also dollar yen is actually getting some traction now from the downside, and the big mover is gold, that has now changed my strategy. What is going to have to change my strategy from now on? Big moves that we've seen in that market there. So some really strong moves in the last few days, and this morning again. Probably not to be surprising, actually, is one of the ECB members, Edvard Novotny, has come out and said that basically the ECB is not meeting its inflation targets, and it needs to do more. So that has put a little bit of pressure, a little bit of downside pressure on the euro, taking a bit of sheen off the run higher yesterday. But still, the outlook remains fairly positive. But I'll take you through how it affects the technicals in a little bit. So, what are we looking out for today in terms of economic data? Well, we have the US CPI data, and that is at 130. Now, core CPI is expected to stay around about 1.8%. Now, CPI is not the inflation metric that the Fed watches. They look at the personal consumption expenditure, but still CPI is certainly a big sort of driver of markets. And if that CPI starts to fall away, because we had producer prices falling away, continue to deteriorate, so it'll be interesting to see how that affects on the CPI number. And then also at 1:30 we've got the jobless claims for the States. Jobless claims expected to be 270, so not really a massive move. I mean, they've basically spent the last sort of 2 or 3 months really now between sort of 260 and sort of 260 odd, 280 odd, so hardly really moving on those jobless claims, but they do have a little bit of an impact, but not too much. I think more importantly will be these Fed surveys, these regional Fed surveys that come out last month. We had across the board terrible numbers on these Fed surveys, and that is certainly not good forward looking for the US economy. And the New York Fed survey is expected to come in at -8 this time, so slight improvement from the 14.7 we had last time. And also Philly Fed as well, dropping below zero for the first time since Q1 2014. It's expected to be -1 again, so both those numbers are not expected to be particularly positive or supportive of the markets, but wait and see how that impacts on sentiment. But certainly those numbers coming in negatively is unlikely to help the sentiment on the dollar. So that takes me to my chart of the day, which is the Aussie dollar. Now, the Aussie dollar has had a big strong run today, and that is coming, I'd say, in spite of the employment data that we saw out from this morning. You saw Australian employment falling. The unemployment rate did fall to 6.2%, but still I think that was more a function of the falling participation rate rather than the improving employment outlook generally. But still, we did have a strong move because the Kiwi is very strong today, and the Aussie has continued to improve. And look at this breakout on the technicals. We've had this. I've talked previously quite a lot about the resistance band between 72 figure and 72.60. We had that breakout last week. It's come back to find support pretty much bang on that 72 figure support. and rally once again, and it looks like it's moving for a test of that 73.80 level. 73.80 is the big overhead resistance now near term, because that was a Monday's high. If it can break through Monday's high, it would seemingly go on towards a test of that 74.40 level, which is the big August resistance. Now, what we've also seen here is arguably a little bit of a base pattern on the daily chart. You could certainly see that there has been a rally through that resistance at 72.80, which is there or thereabouts. The initial support. You look at this hourly chart, 72.90. I've got in the line here. It's a bit of a pivot level near term. You saw a bit of a resistance coming in there, and then subsequently supportive. So 72.90 is that sort of breakout level. So around that level is where we find the initial support. I think immediate term, looking at the momentum is pretty strong still, pretty positive on all these hourly momentum indicators. So using sort of any sort of dips, I think, as a chance to buy on this Aussie now, because it certainly looks like it's going to be pressuring that reaction high from Monday on 73.80 area, but certainly looks as though the improvement in this chart continues. Now, 74.40 is a big overhead level, a big level. It's a big level that constrained the bulls through late July and into August as well, and it would be a fairly important move if it broke through that level. But certainly this chart continues to improve on a longer term basis. I think this is again a function of the dollar correction that we're seeing in across these forex majors at the moment, and certainly the Aussie is partaking in that move. So looking at these daily momentum indicators, much stronger on the RSI, moving consistently above 60. Look how often it sort of failed around that mid-50s level through June, July, August, September. Now much more positive on the RSI. Also the MACD line is more positive. The stochastics also more positive, so pretty much across the board it's looking much stronger. So the Aussie continues to improve, and the outlook is much better as well. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.